Welcome, everybody, to Numbers Matter. This is episode 2 of the Numbers Matter podcast, which is all about empowering small business success through clarity with numbers, a fantastically empowering success tool, if you will. And welcome to my co-host here, Chris Wakehoff of Numbers Matter, the numbers guru in our group, and Christy Strow from ChristyStrow.com, who is an author and a business coach, and in particular, the author of Passion, Plan, Profit, which is applicable to our big subject here. And this is our year-end episode where we're going to talk about clarity with numbers. And Chris, I want to start with you in terms of I think what is a frequently asked question, I imagine, in your business about, should I buy that computer before December 31st? What are the advantages of that? And how does all that year-end decision-making work?
Thanks, John. I'm excited to be here again with both of you discussing one of my passions, which are the numbers that run a business. I do get that question a lot. In fact, I have a lot of tax planning meetings coming up in the next 2 to 3 weeks where people ask that question. And usually it's about big ticket items. Should I buy a new car? Should I buy a truck? And then the smaller ones, should I buy a new computer, office equipment, that type of thing. And in some sense, it doesn't matter if you're going to spend it, whether you spend it this year or next year. If your business is in a continuum mode, you're going to be in business for many years. So whether the expense falls in one place or another, sometimes doesn't really matter. But it does matter if during COVID, for example, which is what has impacted us this year, your net income may not be very high. And you might have overspent because you received stimulus. So you might have a loss this year. So if that's the case, you don't really need more of a loss going into 2022. You need less of a loss. And you might hopefully be doing much better in 2022 so that you would want to postpone that purchase. The other big thing is it doesn't matter if you charge it, and I think we're going to talk about debt also, or whether you finance the purchase if it's a vehicle. And I sort of recommend cash conservation. So I am a believer in the judicious use of business debt, but you have to buy it. You can't lease the equipment. You cannot lease the vehicle and get the same tax benefits as you can buying it. So if you have net profit this year and you want to reduce that, I would buy it for no later than 12/31. If you are at a loss, then I would wait until January to buy something this year.
So, Christy, do you see that businesses have the clarity to even know what Chris is talking about in terms of, is my business profitable for the year? Is it not profitable? How does that work? And what do you see from your coaching class?
Well, if they don't have clarity, I send them to Chris. What happens often, especially if the business is a sole proprietorship, is that people run a lot of personal expenses through their business. And there's legal ways to do some of that, maybe not all of it, some of the stuff I see. But when you do that, it clouds the information about whether the business itself delivering services or goods to your customers is actually profitable. And it makes it difficult to do what Chris was talking about, which is to decide at your end, does it make sense to buy new equipment because you've made a profit this year, or does it make sense to push it into 2022 because you don't want to make your loss bigger? So it's really crucial when you're making the decisions that Chris was talking about to know whether the business made a profit or not. And the more stuff gets clouded with personal expenses, the more difficult that is.
Yeah, I mean, as a business owner of several decades now, I'm hugely passionate about measuring the profitability and knowing. Chris, do you see that often, that businesses don't even know whether they're profitable or not?
Not with my clients, but I do see it. I do see it.
Well, your prospective clients, maybe.
I do see it with prospective clients where they're just not really sure. And also, I think that they don't sometimes understand their own reporting. So if they have, for example, maybe in QuickBooks, it's set to accrual and it looks like they've made all this cash because they've been billing clients, dollars, but they're actually reporting cash basis for their tax return, which means their financials should be run on the cash basis also, which oftentimes, if it's a service-based business, really reduces the income for the year. And that's why we do tax planning. I don't expect the clients to figure out.
Can I interrupt you there for a second? Because I think that even understanding, for you, that's like the water you swim in, but understanding cash accounting versus accrual accounting, I think let's do the 101 level of that for small businesses that might not even be clear what that is.
Yeah, because when I say that, people are like, well, I can't even do tax planning because I don't understand what those mean. So on a cash basis, all you're doing is reporting your income and expenses that came out of your bank account for a fiscal or calendar year, most often calendar year. So if you spent $1 and you made $1, that's exactly what is going to be counted in cash basis reporting. All entities, no matter their structure, up to about a $2 or $3 million gross, should be reporting cash-based accounting. That's what the IRS likes.
Great guidelines.
Yeah, so that's a lot. That's most businesses, really, the vast majority in the United States should be on cash basis. In my business, for example, and probably both of yours, you send out invoices for services rendered. So accrual accounting means that income is recognized the moment that you send the invoice out, whether or not the client has paid for it. Same with credit. If you put something on a credit card, like if you charge it, when you pay for it is when you're going to record the expense, not when you bought it. So accrual is if you did something within a calendar month, whether you paid for it or received the money or not, you're going to record that information in your financials. The reason the IRS has a pretty high threshold for cash versus accrual is that accrual is difficult. You can get into more technical aspects of what accrual is, especially for corporations where you're really having to do like adjusting entries at the end of the month for your expenses and payroll and all of that. And it's expensive. It's expensive to maintain. It's expensive to do. And that's why the IRS sets a threshold for that.
Yeah, I find like I avoid the accrual because it'll confuse me. Although I like knowing how much invoices I've written and what my receivables are as an indication of the future.
Yeah.
But not really accounting, more like projecting. Is that how it is for you, Christy, or how do you work it?
Well, I do that the same way too. I look at it as when I send invoices that's about the future, not about the present. It's really important not to spend money that I haven't collected. But the other part of accrual that I like is, especially if I take in money up front. I used to have an IT business and I used to take in deposits for hardware, but not necessarily buy the hardware immediately. And I don't do this anymore, but I used to get confused that money that needed to be spent on hardware maybe next month was available now to spend. And that got me in a lot of trouble. So it's really good to know if you take in deposits for things and you don't buy what the customer's giving you to the deposit for, that you realize that you got to accrue that money. You have to save it. So when it's time to buy,
put it aside so you have it when you need it.
Absolutely.
Right? Yeah. And Chris, does this make a segue to the debt conversation in terms of financial clarity from the past year and how we look forward into the new year?
Well, I think at the moment, there is a lot of debt in businesses. A lot of my clients, anyway, received the SBA EIDL loan, which is a 30-year loan at, I think it's 3.75%. Payments start in 2022. They used that loan as a bridge to get through COVID. But overall, I am a believer in debt. I have many clients who use debt as a tool in which to give themselves a lot of money from the business. And there's nothing wrong with that. And the business pays the debt payments. So I think that debt used wisely in business is really important in order for you to achieve success. It's very difficult unless you have a really high cash flow to avoid debt altogether. And so if you're in a growth phase, you have to be wise about it, but it's really important that you think about debt as an option to achieve your goals. Debt also can reduce tax liability. So let's say, go back to the car or truck example. If you need to buy one to eliminate your tax liability this year, because depreciation is really aggressive on vehicles, and you don't have the money to do it, well, you're going to save on taxes if you finance that purchase and you still get the full depreciation of the asset. You do not get that when you lease something. So that's really an important distinction.
So we're getting into the business versus personal. You're talking about a vehicle that's owned by the business. Is that correct?
Well, I mean, these days, it's difficult to fully separate that. What the IRS requires is that you document the use of your vehicle and then you take it as a percentage. So many clients might use the vehicle 20% of the time personally. Other clients might use 50% personally. And so you get, the resulting percentage-based analysis of what you can take in depreciation.
Interesting. And is that, do you have a comment, Christy, about debt and about clarity with numbers for small business and debt?
Yes, I think Chris is absolutely right. He's an expert in this area, that judicious use of debt in the business can be really smart. I really like to separate business and personal. Personal debt, I believe, is very anti-resilient. It makes it so people, well, I have personal experience with this. I guess I can just talk about myself. It made it so I was much less flexible. It hampered my ability to respond to emergencies. So what I prefer myself, and lots of people can use debt judiciously in their personal lives too. I just find that it makes me, there's this term called anti-fragile that this guy, Nicholas Nassim Taleb, came up with. And in my personal life, it makes me much stronger, much more resilient, more anti-fragile with no debt. So that if an emergency happens or, just anything like that, I'm much more able to respond to it when I don't have any personal debt myself.
Yeah, and I mean, I have personal experience too, that I've dug myself into holes with personal debt as well as with business debts. I think my biggest, financial complications with debt came with a payroll debt that got deferred. The payroll company let me pay it later, and then when it was time to pay it later, I didn't have the cash flow to support it that I thought I would have.
Yeah.
So, Chris, why don't you be the expert numbers guru that you are, and how do you respond to these concerns?
What I think is so difficult about it is that I meet with a lot of people who are truly, really passionate about their business. And that has equated to them loading up their personal credit cards to fund their dream business. And that has become so prevalent that in QuickBooks Online, there's actually a button you can click that'll walk you through how to pay off your credit card balances more quickly. Some of that I agree with. Some of it is taking a loan, which I don't agree with. I don't agree with taking loans to pay loans in that respect, because the interest rate is just not doable. So I do encounter a lot of people who have debt because they've fueled their passion project. We don't really suggest that clients do that. There are ways to get a business plan in place. I know Christy's a big fan of failure to plan is planning to fail. And so for new clients that are starting out a new business, we usually do a business plan, and then it has the funding resources, whether that's the capital contribution by the owners or some other mechanism, so you don't have to load your personal credit cards. What I also see a lot, and I have to say I do it somewhat myself, is that there is a strange part of tax law, which is currently being debated, where the rewards of credit card purchase, like mileage on or free travel, that type of thing, is not taxed. So it is taxed if it's converted to cash, And a lot of people don't understand that and are going to get themselves in trouble. But because
That's a
of
good
the
tip.
mileage part of it, I have a lot of clients that are using like a single card for their entire life so they can go to Europe for free, whatever. And so that's very prevalent as well. And so that type of accounting is more difficult, separating what's personal and what's business.
Yeah, so you gave me a great opportunity there to tease, if you will, that's the broadcast term. Episode 3, we're going to talk more about budgeting and planning for the new year. But since this is our December episode, let's talk a little bit about this time of year, because it's so crazy and stressful in so many ways, and including that people can get concerned that their business does not have the clarity of numbers that it should have. So maybe we can close this episode with some words of inspiration about the power of clarity with numbers as you move from 2021 into, oh my God, it's almost 2022. What would you two say to that?
Well, what I would say is that if you don't have clarity in numbers, the end of the year is a perfect time to make a change so that in 2022 you do have clarity. Our last episode, we talked about being grateful. It was the Thanksgiving month episode. And I know that if you have a business and you don't have clarity, that you will be thankful in 2022 to have that clarity that you're currently lacking.
Amen. Yeah, there's something, clarity in the business is really, really important, like Chris has talked about, but it also makes it easier to sleep at night, personally, when you know exactly what's going on in your business. It's, I've had the situation and have had clients, and I know Chris has too, that the business can take over your whole life. And with clarity with the numbers, it's much easier to sleep at night.
And what's more important than sleeping well at night? Seriously.
Yes.
So that's great. I think that's a wonderful note to end on. And, we hope that you all are taking some inspiration from this in terms of the fact that the success of your small business does depend in very large part on clarity with numbers. And we're going to get into the weeds as we've done on this episode, but we're really looking forward to continuing into the new year and helping you to budget and have a plan, not the plan. Say it, Christy. You can be the champion of that saying.
Failure to plan is planning to fail.
Exactly, and none of us want that. So Thank you for listening to episode 2 of Numbers Matter. I'm John Leland from CommBridges.com. This is Chris Wakehoff from Numbers Matter, our numbers guru, and Christy Strow from ChristyStrow.com, author and coach. And we look forward to welcoming you back to Numbers Matter with episode 3 coming very soon. Thanks again for listening. Bye for now.